Welcome back. A real global rout this morning. We are looking at a global market sell-off. The Dow Jones Industrial Average in correction territory, down 10% from the high. Futures indicating a sell-off at the open of more than 400 points, as you can see there. Joining us right now on the phone to weigh in on all of this is W.L. Ross and company chairman Wilbur Ross. Wilbur, thank you so much for weighing in here. On a day that we see we're going to have this kind of damage, what do you do as a long-term investor as you are?
Well, I think what we do on a day like today is look for the things that have fundamental value but get really smacked. And as our markets open up later on this morning, that's what we'll be doing.
So where is the value in this market right now from your standpoint, Wilbur?
Well, I think that some names have been hit far too hard. Some of the tech stocks seem to have gotten very badly smashed. And I think people are perhaps exaggerating the problems of China. China is not falling apart. And while it's true that it had been contributing about half of recent global growth, so it'll slow down a bit. It's not the end of the earth. And I think people are panicking and overreacting, especially in the context of relatively light volume. A lot of people are on holiday right now.
Right.
And the selling exaggerates the price movement.
Wilbur, here's Dagen McDowell.
Wilbur, you did see, it seems like fear took a hold in a kind of a shocking way in the last week or two. Why is that? Is it because people have been burned, not just from the financial crisis in '08, but go back to the technology bubble?
Well, I think it's a combination of all those things. Remember, the markets, especially the Chinese market, had a tremendous run and a tremendous run with unsophisticated people. In the June quarter, there were many times as many brokerage accounts opened in China as had been true in the whole prior year. So you had a lot of unsophisticated people coming in. 2/3 of the new accounts were being opened by people without high school degrees.
Right.
It was just people panicking in, thinking that the government makes sure the market always went up. And now they've found out that markets go in two directions.
Right. Wilbur, Charlie Gasparino here. I guess your analysis would mean you might want to buy Apple at these levels. If any U.S. stock has gotten crushed over fears of China, it's Apple.
What's that, 21%, Charlie? About 21% from the high, I believe.
Yeah. What do you think? Is that a good bet right now? Because I know a lot of our viewers are thinking that.
Well, I don't want to give individual stock recommendations. Certainly Apple is a very real company, hugely liquid balance sheet. And while not everybody was wildly excited about the new watch, me included, I do think ultimately there will be a watch-type device that people do like. So I don't think people should get too frightened just because the one product was not as exciting as it might be.
Wilbur, what's your sense of the commodities complex here? I mean, obviously, that's also where the heavy selling has been. You have been a long-time investor in things like coal and energy-related businesses. Is now a time to find opportunity within energy, or do you think we're still in the middle of this?
Oh, I think we're getting to the point where energy, at least oil, probably makes some sense. As you probably know, we sold our coal interests some several years ago because it seemed quite clear that the Obama administration was determined to put the coal people out of business.
Well, you were smart to get ahead of that one.
Hey, Wilbur, a lot of people are out there this morning asking themselves, is this a repeat of 2008? Is this time to get out while I still can? Talk to us about how this moment for you compares to what happened in 2008. What are the parallels and how is it different?
Oh, I think it's vastly different. In 2008, you had this whole subprime thing collapsing. So you had a real meltdown in the financial system. The fact of stocks going down a bit does not constitute a meltdown of the whole financial system. So it's a totally different thing. This is simply a change in psychology. The 2008 meltdown was a change in reality. You had banks failing. You had the government having to step in. you had a huge financial crisis, not just a stock market phenomenon. So I don't think this is at all comparable.
So would you be a buyer here, or when do you think, what is going to be the catalyst for you to say, okay, I'm ready to start finding opportunities here, Wilbur?
Well, we're giving very serious thought to things now. As I think you're aware from our prior conversations, over the last year or so, we've been a seller of about 5 times as much as we've been a buyer. Not so much because we thought the end of the world was coming, but we just felt things were starting to get a bit high.
And you think the Fed's going to raise rates, right, Wilbur? You think the Fed's going to raise rates in September?
I doubt if they will, in view of what's going on right now. I don't think they'd want to add to the confusion. So I think it's more likely that they'll wait for things to calm down a bit.
Wilbur, thank you so much for joining us. We so appreciate it.
Thank you, Maria. Good to talk with you.
We'll see you soon, Wilbur. Thank you. Wilbur Ross.